Over the weekend, the New York Times filed a report saying that they had gotten a hold of President Donald Trump's tax returns. Now, if you've been following the news at all over the last 4 to 6 years, then you know that President Donald Trump's tax returns was a hotly debated topic, and it has been his entire presidency. They wanted to see how much money he was making, if he actually was a billionaire like he claimed, and if there was any financial ties to Russia. Now, the New York Times reported over the weekend that they had gotten a hold of his tax returns, but they actually didn't publish the actual tax returns themselves, citing that they didn't want to give away their source. But they did publish the apparent findings within the tax returns. And in those tax returns, it supposedly showed that Donald Trump only paid taxes 5 of the last 15 years, meaning 10 of the last 15 years he paid no federal income tax. And of those 5 years he did pay, he paid a very negligible amount. It showed that in 2015 and 2016 he paid just $750 in federal income tax. Now, this has caused quite the tizzy over the last few days, especially given the fact that the presidential debate is tonight. But the real question is, how is it possible for somebody like President Donald Trump, somebody who claims to have millions of dollars and billions of dollars in asset, how is it possible for somebody in his position to pay little to no money in federal income tax? And that's what we're going to be talking about in this video today, because the answer is it's really not that uncommon. And even though President Donald Trump may be the most famous example of this, he is certainly not alone as far as taking advantage of the tax system. So let's get started. Now, before we begin, I want to preface a couple of different things. Number one, I want to preface that this isn't a political video. I am not creating a video to bash Donald Trump, to debate whether or not these tax returns are accurate. But what I do think is a valuable topic to talk about in this video is the process of tax deductions and how a lot of people use tax deductions as a way to pay little to no money in taxes. President Donald Trump is a very famous example of this, a very famous example of somebody who claims to be ultra wealthy but then pays $0 in taxes and reports millions of dollars in losses. But he is certainly not alone in doing this, and there are a lot of other very successful people who do this exact same thing and practice this exact same strategy in order to lower their tax bill. So I want to talk about how this is possible and how this works on a kind of systematic level. The other thing I want to note is that I'm not a tax professional. I am a YouTube business person, and because of that, there are some things that I talk about in this video that are going to be oversimplified. I'm not an accountant. I don't have a degree in accounting. I am purely an amateur that has taught myself this, and I've learned it from my own accountant. So some of this stuff will be oversimplified. I'm sure I will leave out some of the nuances here and there, but overall, I'm trying to keep this video as simple and as easy to understand as possible, and that sometimes means leaving out some of the finer details. So the reason why people like President Donald Trump can supposedly make millions of dollars and can report billions of dollars in assets, but then alternatively report millions of dollars in losses, the way that this works is through tax deduction. And tax deductions are things that every single person takes advantage of. I take advantage of tax deductions. I'm sure you have at some point. There are a variety of tax deductions that people in all levels of income can take advantage of. But the thing about tax deductions is that there are a lot of tax deductions that really favor the wealthy, and that's just something that is a fact. There is a lot of deductions that people can take advantage of with real estate, with business expenses, with assets, with passive income, and so much more. Because of this, there's a lot of opportunity for wealthy people to cut their tax bill really dramatically, and those same opportunities aren't necessarily as readily available for normal people making a normal-sized income. Now, tax deductions can come in a variety of different forms. You have tax deductions for passive income, you have tax deductions for expenses, you have tax deductions for real estate, you have tax deductions for cars. There are so many different forms of tax deductions. But the thing about tax deductions is there is a lot of rules and regulations on how you can go about deducting your expenses from your taxes. There are regulations on what you can deduct and what you cannot deduct. There are regulations on how much you can deduct, how it works. There is just a whole slew of different things that you have to follow when deducting deductions from your taxes. But the two that I want to talk about today are just general business expenses and also depreciation, because these are commonly used tactics in order to decrease your tax bill. Number one is expenses. Now, these are just general expenses, general business expenses that are used in order to make money, and oftentimes you can deduct these expenses from your taxes. A few common examples that you can use on your deductions if you're somebody who's self-employed, for example, would be vehicle expenses, home office expenses, office supplies, different softwares that you use for your business. There are a slew of other examples. But the thing that's tricky about expenses with your taxes is that you can't just deduct anything you want to. For example, if you are self-employed, you can deduct vehicle expenses, but you have to be able to prove that you are using that vehicle for work. For example, if I work from home and I don't use my vehicle for anything else but personal use, I am not going to be able to deduct my vehicle for tax purposes. But if I can prove that I'm driving around the entire DFW Metroplex, if I can prove that I'm using my car quite a lot for work, I can deduct some of the vehicle expenses from my taxes. Another example is your home office. If you work from home and you have a home office, you can deduct some of those costs from your taxes. But for example, if you have a home office and that home office is 200 square feet in your house and your home mortgage is $2,000 a month, you cannot deduct the full $2,000 of mortgage from your taxes. That simply isn't how it works. Instead, what you can do is you can deduct a portion of your mortgage based off of the square footage of your home office. For example, my home office in my house is about 400 square feet, so I deduct the percentage of my mortgage from my taxes that represents about 400 square feet of my house. So you really have to be careful about what you can and what you cannot deduct because not everything is created equal in the world of taxes. The next form of deductions I want to talk about is depreciation, specifically depreciations in real estate. And though I have not seen President Donald Trump's taxes, I am willing to bet that the majority of his $457 million in losses came from the depreciation of his real estate assets. What depreciation is it's a decline in value of an asset over time. We often hear about depreciation in the form of cars. Whenever you buy a car, it depreciates and then it goes down and down in value until it's hit its depreciation bottom. This is what I've talked about a lot on this channel in regards to Turo. But depreciation doesn't just exist in the form of cars, and it also exists in the form of real estate as well. Now, people buy real estate as an asset, and more often than not, it's considered an asset that appreciates over time, meaning that it grows in value. But the thing that I think a lot of people don't fully understand is that real estate is a really great way to add depreciation to your portfolio for tax reasons. The reason is that if you buy a real estate asset, whether that be an apartment complex, a condo, a townhome, a house, whatever the case is, the land that property is on appreciates, it increases because land over time generally does that, it increases. But at the same time, the actual building itself will typically depreciate because as time goes on, people are living in it, the value of it will go down because it's getting run down, it's getting worn down, and as a result, it depreciates. Now, in the form of taxes, what you can do is you can take that depreciation and you can put it against your gains that you've made for the year, thus decreasing your tax bill overall. Now, again, like general business expenses, there are rules and regulations to how much and what you are allowed to depreciate for the purpose of taxes, and you can't just simply pull the figures out of thin air. For example, I have a house, and if I wanted to deduct that house for the purpose of taxes, I couldn't just pull a figure out and say, well, this house depreciated X amount of dollars, so I'm going to deduct that from my taxes. There is a very real process and order that needs to be followed in order to deduct these amounts properly from your overall taxes. But the thing is that if you're somebody like President Donald Trump that has millions of dollars in real estate, you have millions of dollars in properties and in buildings, you better believe that he is taking advantage of every single deduction that he's able to, and you better believe that he has amazing accountants that are tasked to do it. Now, in this specific example of President Donald Trump and his taxes, it's hard to say whether or not what he did or what he allegedly did is against the law. One, because of the fact that we haven't actually seen his taxes. We don't know whether or not what the New York Times is reporting is factually accurate or not. And that's something that we won't know until we actually see his tax returns. But the other thing is that what Donald Trump is to have been accused of doing, which is paying very little to no money in income tax, is something that a lot of very wealthy people do, and he's certainly not alone in taking advantage of the tax system. The fact of the matter is the US tax laws are highly favorable to the ultra-rich, and it seems as though the more money you have, the more investments you have, the more assets you have, the easier it is to decrease your overall tax bill. And this seems to be exactly what President Donald Trump is doing. But the fact of the matter is, he's not the only one doing it. There are dozens, if not hundreds, of other ultra-wealthy people who are doing the exact same thing. So I think more so than anything, the US tax system needs to be reevaluated, and a lot of these loopholes need to be closed so that everybody pays their fair share of taxes. Now, I know that this was an oversimplified explanation of how taxes work, but I really wanted to just bring the point across that the entire headlines of President Donald Trump paying zero taxes for 10 of the last 15 years, it might be true, but the fact is that there are ways ways to go about doing that legally, and it seems as though those ways are through depreciation and through general business expenses. Not to mention the dozens of other ways that you can legally deduct money from your tax bill. But this is why I tell people all the time in my videos and in my personal life to get a good accountant. If your taxes are ever getting to the point where they're too confusing for you to do on your own, if you have a business, if you have a side hustle, if you have passive income, hire a good accountant, because a good accountant can help you navigate the literal dozens of different ways that you can go about deducting your taxes. So with it being said, you guys, I would love to hear your thoughts. I thought that this would be an interesting video to cover, especially given the news. Again, this isn't a political video. I'm not taking sides. I'm simply wanting to educate people on tax deductions. I would love to hear your comments down below, so make sure to leave a comment. And while you guys are at it, make sure to hit that like button, hit that subscribe button, and hit that notification bell. And I will see you guys in the next video.